Whether you own Bitcoin, plan to buy Bitcoin, believe in cryptocurrencies or not, you need to educate yourself on what it is, why it's important, and why countries like El Salvador have adopted it. I just did a webinar with Michael Saylor, the CEO of MicroStrategies, and Bill Barnhart, the CEO of Abra, what I consider two of the smartest people on the planet. Now, in this webinar, Michael Saylor provides what I consider the most clear and cogent arguments for Bitcoin I have ever heard. Let's dive in.
Let me do a proper introduction here. First and foremost, Michael, welcome. Good morning. Good to see you.
Thanks for having me, Peter.
Yeah, of course, pal. Let me introduce Michael. Michael Saylor is the chairman and CEO of MicroStrategies, a publicly traded business intelligence firm that he founded in 1989. He is also founder of Alarm.com, named inventor on 40 patents, author of the book Mobile Wave, founded and served as a trustee of Saylor Academy, Saylor.org, a nonprofit organization that provides free education to 800,000 students, inventor on, as I said, over 40 patents. He is an advocate of Bitcoin, a strong advocate, and we'll get into that in a moment. What I'm most shocked about is how recently Michael came to this realization and how powerfully he is engaged in this conversation. Hope.com is his site that you should all go take a look at in terms of resource to understand this properly. Dual degrees in MIT from aerospace engineering and history of science. And full disclosure, my fraternity brother, effectively a roommate, we lived together for many years, and very proud of that at Theta Delta Chi. Michael, good to have you, pal.
Yeah, thanks for having me, Peter.
Yeah. Let me introduce Bill Barnhart as well. Bill is CEO and founder of Abra, the leading crypto wealth management app, just about $1 billion in assets under management. Abra, first service combining crypto brokerage, a high yield interest account, a lending service for borrowing against crypto holdings, which is a really, for me, critical innovation. Bill's multi-decade career in the internet spans everything from being at Goldman Sachs, at NASA, at Netscape, and he, importantly, I think, gave the first TED Talk on Bitcoin back in 2012. Has been a frequent expert on many of the top media. So, guys, here's my mission for us today, and we're going to be focusing, Michael, on you. But these are the topics I really want to hit hard for our members. What is Bitcoin? And more than an asset class, why is it important for creating a world of abundance? Because I really do believe it's fundamental for that. And Michael, I credit you with really, clicking that for me. Why is Bitcoin important on a corporate balance sheet? The implications of El Salvador's historic move, what countries are next? Why do you think it's important for individuals to consider holding Bitcoin as a store of value? You know, Michael, you recently did a very interesting series of conversations about comparing it to gold. We'll go into regulation, we'll go into DeFi, a little bit of Ethereum and altcoins. So those are our subjects for the day. Michael, I was amazed that you came to a realization about the importance of Bitcoin. It wasn't 5 or 8 years ago. It was really at the beginning of the pandemic. Can you tell that story? And let's let you go here, man. Tell us about why it's so important.
Okay, so the catalyst for me to discover Bitcoin was the K-shaped recovery, the combination of the lockdowns and the expansion of the money supply. And I think what we saw was in the K-shaped recovery, Main Street shut down for a year, Wall Street recovered in a few weeks. And there was a delamination between financial assets and mechanical Main Street type assets or operational assets. And that caused me to question the nature of money, because if I had $1 billion worth of Wall Street assets like the S&P index, I could have gone to sleep on my floaty in my Hampton swimming pool for a year, and I would have had the best year of my career doing nothing. And if I actually ran a Main Street company selling something or doing something, I could have worked 30% harder and generated 30% more cash flow, and I would have got nothing. And this dichotomy between one class of the economy working 30% harder to get nowhere, and the other class of the economy not working at all to get 30% further, caused me to lose a lot of faith in the economy, and it questioned my thought about money. And so if we go to first principles, Peter, I think the most important idea is money is financial energy, or it's socioeconomic energy. And I think a lot of people don't realize or don't think about it as an energy system.
Yep.
And as soon as you think about it as energy, then the light bulb goes off. And Peter, you're an engineer, I'm an engineer, and I spent many years after I left MIT not really thinking about engineering principles applying to money or finance. And I think that in March of 2020, it shocked me out of that lethargy. So I'll give you a simple analogy. Fat is organic energy. It's an organic energy storage battery. You know, if you eat a bunch of food, your body generates insulin, you store the organic energy as fat. The benefit of storing that fat is that you can go without food for a month and you won't die. Now, so fat is a energy system for storing organic energy. There are other systems for storing organic energy. I can have boxed food, I can have Twinkies, I can have canned food, I can have smoked food, right? I can have fish in a pond behind my house. I can have cows outside in the pasture. Those are all systems for storing organic energy. We call it agriculture, or we call it packaging. Now let's think about other energy systems. You know, I put a sail on a ship. That's a way to harness wind energy. A clipper ship with 3 sails is more complicated. A bow and arrow harnesses kinetic energy or potential energy. So does a dam. I can have a gun. I can have complicated machines. The entire science of engineering is about channeling energy, whether it's gravitational energy or wind energy or chemical energy like a fire, or organic energy. So now I get to money. So money is a system for channeling that social economic energy, the ability to compel other members of the human race to do something, or to, you know, will you give me your house? Will you give me your car? Will you drive your car for me? Will you build a building for me? Can I live on it for life? Will you feed me for the rest of my life? Will you work for me the rest of my life? All of this is about channeling energy. The human race has had energy systems for money. We started with seashells. We trade the giant stone cone of the Yap people. Eventually, we settled upon gold. And gold is commodity tokens, but it wasn't just simple gold. You know, the Lydians had gold coins, the Romans had different gold coins, the Italians had the florins, you know, the British had the pound, the sovereign comes along. So eventually we realized that moving around gold tokens, or tokens in general, isn't that efficient, because you can't chop them into pieces. And if you're holding them, people club you over the head and steal them. So sometime early on, certainly 500 years ago, we split, and we had the underlying base layer money, maybe gold, and then you had gold paper, like gold notes, and you had paper money. And the paper money issued by first goldsmiths and then issued by early gold banks and the like, that allowed us to trade credits. And that went on for 500 years. And the world shifted between this base layer commodity and paper money. We eventually had the quote unquote gold standard, which is you can trade $1 for gold and trade the gold for the dollar. Then with the Treaty of Genoa in 1922, we had a gold reserve standard, which meant that the dollar and the pound were the reserve currencies. They were backed by gold, and everybody else was backed by the dollar and the pound. After World War II, we went to the Treaty of Bretton Woods, and that meant that the US dollar was a reserve currency. It was backed by gold. And then everybody else traded their currencies for the dollar. What's the significance? Eventually in 1971, Nixon took us off the gold standard completely, and we went to all fiat, not pegged to any underlying asset. And what that meant was, in the absence of any thermodynamic cost to print more money, you don't need to mine gold, you don't need to do anything. We could just expand the money supply, and that resulted in about monetary inflation of 7% a year, every year for 40 years. That I didn't figure out, but what that means is if you're expanding the money supply by 7 to 8% a year, every year, that means that your assets have to appreciate by 7% to keep purchase power parity. And that means if you're earning, if you're not raising your salary by 7%, you're getting poorer. Now, that went on a status quo from 1971 all the way to 2020. In 2020, the monetary inflation rate in the US went from 7% to 21%. It tripled. And every other currency in the world's pegged to the dollar. They at least tripled. So the euro tripled, the DRAM tripled. All the strong currencies tripled their inflation rate. The weak currencies inflated 40% a year. And so they're sinking against the dollar. Then you've got the peso with nominal 45% inflation rate, but real inflation rates of 70% or more. And then you have collapsing currencies like in El Salvador, the currency's collapsed. In Nigeria, it's collapsing. In Lebanon, it collapsed 85%. In Zimbabwe, it collapsed. So what is the significance of Bitcoin? Bitcoin is the first engineered monetary system in the history of the human race. And that's the light bulb going off. We created an asset sitting on an open computer network, and there's never going to be more than 21 million of them. You can divide it into 2.1 quadrillion Satoshis. So it's pretty infinitely divisible. But what it means is the human race has perfected the idea of a bearer instrument like gold, and we fixed all the defects of gold. If I bought $1 billion of gold, the gold miners will keep dumping more gold on the market. If the gold ever goes up by a factor of 10, gold jewelry gets melted down to dump gold on the market. And the fundamental problem with the gold standard and the gold reserve standard is there is no hard mathematical protocol or engineering protocol that links the paper gold or the fiat derivatives to the underlying asset. So as soon as the US got control of the gold supply after Bretton Woods, they could keep printing more and more money. And they weren't, and first it was 40% backed by gold, then 30%, then 20%, then 10%. Then all the other countries in the world realized that the US was just going to print infinite dollars, and the French got upset. So they started asking for the gold back. And when the French asked for the gold back, all the gold was flowing out of the US. And then Nixon said, oh my God, we're going to have no gold left. And so we can't keep giving people gold back. So we defaulted on the gold standard, and now everybody's free to print as much money as they wanted. And so that's by the way, why you don't want to buy gold, because if you buy gold, a gold banker can basically sell 100 tons of gold for every 1 ton of gold they own. You call a hypothecation. There is no integrity between the paper derivatives and the underlying asset. And the absence of that technical integrity means, and we come back to engineering, it means that that I put energy into the system and it bleeds out 10% a year. So if I had a bathtub bleeding 7% per period, right? The bathtub drains, the swimming pool drains. If I have a leak in a fuselage of an airplane, it won't fly. If I have a leak in a hull of a ship, it won't sail. So Bitcoin's the first thermodynamically sound system. It's a closed system.
I love that analogy. I love that analogy. And one of the things that is clear is the majority of the world does not appreciate the level of inflation that's incurring, and they don't realize they're moving backwards. Or maybe they realize it, but a bit too late. They think, everybody's working hard. One of the points you made in particular was that this economic, thermodynamically sound economic system is probably more important for the developing world than it is even for the developed world. Can you speak to that?
In the developed world, you have banks and you can move money from point to point for a few dollars. And you have Wall Street and you can buy assets like the S&P 500 index. If you had $100,000, if you don't put it into the S&P index, you lost purchasing power every year, 7% of it for a decade. So the store of value in the Western world is I shift my assets into ETFs and index funds and stocks, and I wire money around on Apple Pay or whatever it might be, write a check, it's cheap. In the developed world, 2/3 of Mexicans don't have a bank. In El Salvador, they don't have banks. billions and billions of people don't have banks. And we say they're unbanked. In India, they don't have a bank. But most people don't really think about what that means. Here's what it means. You're a type 1 diabetic, and you don't have insulin. And that means you can eat infinite food, you can't form fat, and you will starve to death. That's what that means. If you can't store economic energy over a long period of time, it means that you can work yourself to death. All your life savings gets drained to zero. And in the month when you lose your job, your family starves to death. So unbanked. In El Salvador, it means there's 2 million people in the US that send $10 billion back to El Salvador every year. 1 billion of it gets stolen by the money transfer agents. Okay, they take a 10% commission.
Crazy.
Okay, you're taking 10% commissions from a wage laborer sending money to their mother, 10%. The Visa and MasterCard network, by the way, take 2.5%. They're monopolies. Okay, but 2.5% is painful. 10% is brutal. Then you have to get the money through a Western Union office, which means travel for 2 or 3 hours, and maybe you get mugged on the way. And when you get the money in a currency. In certain third world countries, you get the money in the local currency, which is losing 30 to 40% of its value a year. So I send you $1,000, you get 900, then you spend another 100 to get it. So you get down to 800. And then every month that goes by, you lose 50. So it's pretty devastating. That what's the problem? You can't move the monetary energy. And the second problem is you can't store it. I mean, in the US, the typical US or Western individual is losing 1 to 2% of their energy a month if they store it in the currency. The way they get around it is they buy S&P index, and the S&P is up 32% year over year, and they pretend they're rich, right? It's like, good. How does someone in El Salvador buy S&P index stocks? They don't have Robinhood. They don't have a bank.
Yep.
Right? So you're living hand to mouth. So the significance of Bitcoin for them is you can take a $50 Android phone, download a software wallet. I can send you $87 instantly for free on the Lightning Network. If you store it in Bitcoin, it's going to go up in value. And otherwise you can spend it, and you're not at the mercy of I'd like to say banks, but the banks don't care. You're not at the mercy of the money changers. And the best case is El Salvador, where they use the US dollar. So they're only losing 1 to 2% of their purchasing power a month. The worst case is Zimbabwe, which means that somebody runs the country. You have to buy the local currency. And that person that runs the country gives billions of dollars of that currency to their buddy. And you better spend the currency, because it'll only be worth half as much in 4 weeks or 8 weeks. And in the real worst case, they tell you it's illegal to hold any other asset. I can't hold land. I can't hold gold. I can't buy stocks. And so, you know what? It's literally like taking your insulin away and making all of you diabetics and saying it's illegal to store fat on your body. Good luck with that. In the one day when you can't find food, you will surely die.
So I wanted to double click on this because it's so important. I mean, the realization, and this was a conversation we had down in your home in Miami just a month or two ago, is how absolutely critical this type of a engineered economic system is to allow people to have prosperity, right? I mean, one of the things we talk about is exponential technologies are taking everything that used to be scarce into abundance, whether it's food, energy, water, healthcare, and so forth. But I love this system of the requirement to be able to store energy, and money is economic energy. What happened in El Salvador? Can you take a moment to explain the implications and how important this is?
Well, I think they had a civil war and they lost their currency. Okay, countries that are poorly managed lose their currency privileges. And what we can see is that at 100 countries in the world are all losing their currencies. Everybody's basically, the Venezuelans not going to have a currency. The Zimbabwe don't have a currency. Any currency that collapses more than 20 to 30% against the US dollar eventually fails. So people throw that over and they go to the dollar. The euro is effectively pegged to the dollar. Most of the other currencies are pegged to the dollar. So you've really got two currency systems. You've got CNY, and even the Chinese peg their currency to the dollar, right? If you look at it. So you've got the first world currency system, then you've got the developed world currencies. They're all failing. So in El Salvador, they didn't have a currency. They used the US dollar, and then they're at the mercy of two things. One, the money changers are basically stealing 10 to 20% of their money when they move it back and forth. If I charge you 10% commission every time you move your money to a family member, I mean, how many times do you get to do that, right? So that's a problem. And the second problem is, now I'm storing my money in the US dollar. It used to lose 0.5% a month, and now it's losing 2% purchasing power a month because the Fed's printing money. So how do you crawl out of that abyss? And I think the president of El Salvador realized that what you want to do is back your currency or back your country with an asset which is appreciating in value. So Bitcoin's been appreciating 120% a year every year for a decade. The S&P is up 12% a year for a decade. So Bitcoin outperforms the S&P by a factor of 10. It outperforms gold, which is up by maybe 1 to 2% a decade. So it's outperforming gold by a factor of 50. Look, here's the big idea, that Bitcoin's not just an asset, right? It's the perfected apex property of the human race. If you have $1 billion and you want to give it to your grandchildren, are you going to buy land in California, a building in New York, $1 billion stack of gold? Are you going to buy $1 billion of Apple stock? Are you going to buy $1 billion worth of art, diamonds, commodities, corn futures, oil? What are you going to buy for $1 billion that'll be here 100 years from now? And if you think about it really hard, you conclude that every other asset class is more easily impaired, seized, confiscated, taxed, or regulated. And of course, some are unpractical. There's no way that 5 billion people in Africa and Asia are going to be walking around with Apple stock on their mobile phones. That's not happening. How do you pay for for anything with Apple stock on a Saturday afternoon in South Africa, right? That doesn't work. And so, yeah, you could try to use a currency, but now I've been in business 20 years. I can't do business in Nigeria after 20 years, because if you want to do business in the fiat currency, you have to have your bank deal with your central bank, deal with their central bank, deal with their bank. Can't do it on the weekend, and you can't do it because of Foreign Corrupt Practices Act in Russia or Nigeria or whoever. And so how do you get 8 billion people trading with each other through 100 million corporations? You need a protocol. What is the protocol? Bitcoin. Bitcoin is
Michael,
an open monetary protocol to link 8 billion people and 100 million companies with one another in the 21st century.
I'm going to get back to El Salvador. Give me a Bitcoin 101, if you don't mind. We probably have some people here who have heard of it and are interested in learning about it. And we've got a wide range. And I want to get back to what did the president of El Salvador just do. But let's take a second and give us the Bitcoin 101, if you would.
Okay. Let's say that I wanted to create a non-sovereign store of value. I have $1 million. I want to save it for 100 years, and I don't want to trust anybody else with the money. I can't put it in a bank. Every single person in Argentina had 90% of their US dollars and their Argentine pesos seized overnight by the government 20 years ago by edict, stroke of a pen. It wasn't hard. So I can't leave it in the bank. I can't store it in a currency because the banks can steal it from me. I can't save it in a stock. The company might not even exist, and the CEO or the board might dilute it. I can't put it in land because I can't move the land, and they could tax in Florida. They tax you 2% a year on the land. You lose your land in 20 years. So I buy gold. Now that's the traditional idea, but the problem with gold is that every year gold miners produce 2% more gold, and then I can't carry $1 billion of gold through an airport, so I have to put it in a bank. And then 95 of the top 100 cities in the world, 95 or more of them seized all your gold in the past 100 years when the regime changes. Okay, so how do I fix that? So this guy Satoshi invented digital gold on an open protocol monetary network, and we call that Bitcoin. And the way it works is I define 21 million gold coins. I dematerialize them in cyberspace. I make them infinitely divisible by 100 million units each, and that's called a Satoshi. Then I make it impossible to ever make any more than 21 million. And then I give you a protocol where any computer can send the coin or the Bitcoin to any other computer without a middleman. And I make it possible for you to take personal custody of your asset. So if I want $1 billion worth of property, I can carry it around in my head by memorizing the passphrase. I can hold it on a hardware wallet. I can hold it on a mobile phone. I can put it to any computer in the world. Then I can move the $1 billion to any custodian in the world in a few minutes for a pittance. So the idea is, if I took gold and I said, you can't mine any more gold, check, that would make gold more valuable. And if I said, you can't use it for jewelry, there's no jewelry being melted down into gold, that makes gold more valuable. And if I capped it at 21 million and I numbered each of the gold coins, that'd make it more valuable. And if I made it infinitely divisible, and if you could authenticate it in a split second with a mobile phone, that would make it more valuable. And if I made it programmable with a protocol, and I made it possible for a computer to make 1 million transactions a second and talk to 100 million other computers using Intel semiconductors, that would make it more valuable. So in essence, we created programmable gold on a network. And then what's the last twist? The last twist is you make it decentralized so that there's 10,000 different computers, or maybe even 100,000 different computers running the software at the same time with an identical copy of the ledger, so that no company, no CEO, no government, no regulator can meddle with it, the protocol. So it is literally, it's like a virus released into cyberspace, a living life form. You can't stop it without turning off every computer on Earth at the same time, and you have to keep them turned off forever, right? You can't kill it. And so the idea of Bitcoin is apex property for the human race. And for the first time in the history of the human race, if you have $1 million, you can hold $1 million in your head, walk through a border, send it across the world, take custody, or transfer it to any custodian, or prove that you have it in a split second. And you can't do that with anything else. That's what Bitcoin is.
Beautiful. Thank you for that. So let's go back to what El Salvador just did and the implications thereof. Please.
Okay, well, if the US dollar is losing 20% of its purchasing power a year, which is what's happening right now, the dollar is collapsing against scarce assets. The reason the NASDAQ or the stock exchange is an all-time high isn't because the companies are more valuable, it's because your currency is weak. And the currency keeps collapsing against scarce assets. That's why we have inflation. That's why houses in the Hamptons or Palm Beach cost more. That's why the average home in the US costs 15% more than it did 12 months ago. So if El Salvador is going to prosper as a country, they need to invest their assets or invest their money in something which isn't going to collapse. If you're holding $1 billion of US dollars, and if the US Fed doubles the dollar supply, they stole half your money from you. That's what's going on right now. So what El Salvador
Why is that not obvious to everybody? It's crazy.
It's because part of the world is rich and privileged. And so if you are wealthy in the US and Europe, and you have a large stock portfolio, you think you're a genius because your portfolio is up 32% or 47% year over year, and you made wise investment decisions, right? And then you think, oh yeah, I see that everything's going up in price, but you've already got your house, right? If you were trying to buy a house in the Hamptons, it went up in price 45% year over year. If you already own the house in the Hamptons, you think, well, this is great. My house is more valuable. My stocks are more valuable. I'm a genius. I'm a good investor. And so if you're asset rich, and that's 10% of the world, you just feel like everything's great. On the other hand, if you're a dentist working for $137,000 a year, the price of early retirement and the price of all those things you ever wanted to buy is pulling away from you, right? You can't afford to buy there's something wrong when people say we're going to pump up the price of assets to protect the economy, because what you're doing is you're inflating the price of assets for everyone that works for a living that wanted to buy those things. What? And so people don't understand it, because either they're wealthy and they're beneficiaries of loose monetary policy, right? Or I think that's the number one reason, or they're stuck in they're stuck in a frame of reference. If you have a strong ego, it's like if I take you to the top of a cliff and I kick you off the cliff and you're humble, you would look and you see, oh, that mountain is like zooming up really fast. That's not a bubble. I'm falling, right? But if you have a strong ego, you think, oh, the mountain seems to be like going up really fast. It's a bubble. It's got to eventually come back. And it's just, and the issue is it's not coming back. You're going to smack into the earth because you're falling. So, I mean, I guess the best example is most Americans can't imagine their currency weakening. They're arrogant about it. If you go to Argentina, the currency weakened from 1 peso to the dollar to 155 pesos to the dollar over 20 years. You lost 99.5% of all your wealth because everything's going up in pesos. Are you getting richer, or is the peso collapsing? So I think people in Zimbabwe, Venezuela, and Argentina, they get it. They understand that if the currency is collapsing, your stocks aren't getting more valuable.
So
and
Michael,
your
I
house
know
is
that
not
you
getting
were,
more valuable. You're just getting impoverished. But Americans can't conceive of American currency weakening. And so if you're stuck in the American mindset, let me just give you one more metaphor.
Yeah, sure.
It's like I'm sucking the oxygen out of the air. If I inflate the currency by 10%, I sucked 10% of the energy out of your dollar. When I inflate the currency by 100%, I sucked half the energy out of the dollar. I'm marching you up Mount Everest. The oxygen is disappearing. You're going to get hypoxia. Eventually, if I suck all the oxygen out of the currency, the economy collapses. And that's what happens in hyperinflation. When the current currency collapses, it's like your blood doesn't carry oxygen, and the entire economy is ripped back to Stone Age barter. And practically what happens is, El Salvador flips over to the US dollar as the next best currency. And but here, what's the problem with that? How am I supposed to get dollars? If you study the history of America, before the American Revolution in the Chesapeake Bay, they used bales of tobacco as money because they couldn't get money. So if you use dollars in Zimbabwe or Nigeria or El Salvador, and there's no bank and there's no Visa and there's no Apple Pay because it's illegal, then where's your dollars coming from, right? I mean, how do you operate a 21st century economy without access to a currency? And if the currency is losing its value fast enough, then you have to have an asset in order to store your economic energy, or else you get Weimar Republic.
So I know you
got that different places in the world now.
I know you were involved in Elon's decision to put Bitcoin on Tesla's balance sheet. We can get to that a little bit later. And I know you've been working or having conversations with sovereigns about making it the reserve currency. Were you involved in what happened in El Salvador, or is there other countries that you're working to tip?
I mean, we're all communicating. Everybody in the Bitcoin world is working with an agenda to provide property rights to 8 billion people, right? I mean, and that means everybody's communicating with everybody. Sometimes it's explicit on Twitter. You'll see communications back and forth, and we're very public about it on the record. And sometimes they're back channel communications. And, if I'm talking to a public company CEO or, a politician, obviously I keep it confidential, but sometimes we're very public about it. And Twitter's a pretty good mechanism for that. Look, I think the big picture here is, if you want to boil down what's going on in the world right now, we figured out how a technology to give the human race property rights for the first time. We've applied engineering to economics via Bitcoin for the first time.
I mean, this is equivalent to Google on a feature phone, right? It's giving the world access to information, and mobile telephones giving the world access to communications and bandwidth. And this is giving them the ability to transfer energy in the same networks.
Yeah, Google's information energy, and this is monetary energy, but putting this in perspective, Google spends $160 billion to create 1.6 trillion in value or market cap. And so they put $1 in to get $10 out. Bitcoin spends $4 billion to create nearly $800 billion in value. So you put $1 in to get up to $200 out, certainly $100 to $200. So it's 10x or more efficient use of energy to create value, because you've literally got a big tech monetary network that is, what's Google move? It moves a video. Okay, I get, what's more valuable, moving an image of the check, or what if the check is written out for $1 billion? Think about how valuable the information is in $1 billion check, right? Versus the value of a picture. And so what you've got is the highest value digital network in the history of the human race. And it's a paradigm shift, Peter, because no economist ever, when we went to MIT, they didn't teach a course in monetary engineering. Monetary engineering will be a course in the future, which is, how do I create politically sound, thermodynamically sound, tokenized energy on a digital network? It's a complicated thing, but people that are sensitive to it, they realize that this is an economic imperative, because there's $400 trillion of assets that are losing 10% of their value every year through currency inflation. It's a technical imperative, because for the first time you can deliver property to 6 billion smartphones. It's going to be the next evolution in the mobile wave. And then it's a moral imperative. Right.
I do think it's a moral imperative, and that's a really
human rights.
It is about human rights. It's about, allowing people to have the systems in place to seek abundance and prosperity. It's not about a world of luxury for them. It's a world of possibility. What did El Salvador actually pass? What did the country enable that's so unique? Just so folks have that piece of data.
They made Bitcoin legal tender in the country, which made it sort of pari passu at parity with the US dollar. So the US dollar is the official currency for medium of exchange and unit of account, and Bitcoin becomes the official currency for store of value and their equivalent. So they legitimized it as an official asset. They also they said that anybody needs to accept it as payment for debt, and that's a pretty big deal in the country. And then they also said there's no capital gain on the transfer. Okay, so that's a huge deal. Now, it may not be a huge deal for American citizens, because American citizens have obligations under the IRS tax code for 10 years after they leave the US. You have to renounce your passport and wait 10 years. But if you're an international citizen, if you're an Australian or South African or whatever, and you go to El Salvador, what it means is, if you were holding highly appreciated Bitcoin, you could transfer it without paying capital gains tax on it, and that's huge. So they'll probably draw a huge international community. Now, of course, it may not be so world shaking as like Singapore and UAE already have sort of tax havens. So it kind of puts them kind of asymmetrically at parity with them in a way, but it's a pretty good idea, because anybody with the wherewithal might decide to settle. And of course, I think it'll probably draw businesses, any kind of Bitcoin related business that might have a tax advantage might decide to locate there. And so,
or entrepreneurs who want to develop products and programs. Let me use that as a moment to bring Bill Barnhart in. Bill, take 1 second and what is Abra? And you mentioned earlier to me that you have a large number of users in South and Central America. Could you speak to that a moment?
Yeah, sure. So Abra is a crypto wealth management app and service. We allow you to trade Bitcoin versus dollars, as well as about 140 other cryptocurrencies. It's a great way to get in very easily. If you're in the US, you can wire unlimited amounts of money in via the traditional banking system, buy Bitcoin. We run a high yield service that allows you to deposit your crypto as well as cash and earn interest on it. So we currently pay about 5% on crypto deposits and about 10% on dollar deposits. And then lastly, we allow you to borrow against your Bitcoin holdings. So if you're holding Bitcoin or Ethereum, you can actually borrow dollars. And so that's what we call holding the appreciating asset and borrowing in the dollars, which is the depreciating asset. Now, what's really interesting about how our business has evolved over the past couple of years is that the two areas where we've seen the fastest growth are in the high net worth user base, right? It's people with 7 figures and up of assets where they're putting significant amounts of money to work in Bitcoin and Ethereum and other crypto assets because they see what's happening with the money printing that Michael was talking about. The other group of people where we're growing equally fast, in some regions even faster, is in developing markets, particularly in markets where the currency has either gone to shit in the past, is going to shit now, or is depreciating even faster than the dollar, which is true in most countries anyway, or places like Venezuela or Argentina, where it's effectively going to zero and they have no choice but to adopt a dollar standard. So we've seen hundreds of thousands of users flock to Abra from places like the Philippines, Guatemala, El Salvador, who in the aggregate are doing as much volume in our business as the high net worth clients, many of whom are on this call today, who are depositing millions. They're just a smaller group because there's fewer millionaires out there. So it's astounding. Now, the people who probably need the most education, who don't intuitively get it quite yet, are the people in the middle. Because as Michael said, if you're holding an ETF on the S&P 500 and it's going up at the same rate as currency inflation, it's not intuitively obvious that the government is actually inflating your currency to be worthless, and what you're actually doing is keeping pace via some other intermediary asset like a stock. And so those people who are able to keep pace, or at least not, or treading water, as you will, or like the Flintstones, cycling in place or pedaling in place forever, are the hardest to educate because they're the ones who haven't suffered the most, right? People who are really worried about inflation at large scale, high net worth, and people who have seen those assets go to zero quickly are the people who seem to love the Abra model the most, which I find I've never seen anything like it. I've never seen a model where I'll have a conversation in the morning with somebody who's going to put $15 million personally via family office or individual into Bitcoin, and then go on Twitter a few hours later and talk to some customers in Guatemala who are asking questions about what it means to put $10 in Bitcoin, which might represent a big chunk of family savings, using exactly the same platform.
And I just got to make a disclosure. I'm an advisor to Abra. I hold my Bitcoin in Abra. Just want to make sure that's clear out there. So Bill, where do you see the ultimate agility here for this in terms of the ability to move it versus as a bank or it's stored to actually use it for daily life? Is it going to be easy enough? Is it going to be something that actually is, equivalent to an Apple Pay eventually?
Yeah, I see a multi-tier system emerging analogous to the existing system. And it'll look different in emerging markets like what we'll see in El Salvador, where they don't have a viable government issued currency, versus the US, where the dollar is not going to die. Okay. Now, what's the same in both cases is people will want to hold Bitcoin, and eventually everyone will get it, and everyone will understand that Bitcoin is the appreciating asset. Now, things will diverge is that in the US, a lot of people will simply hold the Bitcoin and get a credit line in dollars, because why would you want to spend what's going up in value when you can spend what's going down in value, right? So I'll take the dollar loan against the appreciating asset all day long. In places like El Salvador and Guatemala and the Philippines, there I predict that over time, our users will hold and spend Bitcoin because they effectively will have no choice, meaning that they won't have a dollar denominated system that's as easily accessible. So technologies that Michael mentioned, like Lightning, which kind of look a little bit like a PayPal or an Apple Pay, but specifically for Bitcoin, make the ability to do very small dollar transactions near free, right? It's easy as taking out a dollar bill piece of paper and handing it to the person next to you using a smartphone. So I see this new kind of crypto-centric or Bitcoin-centric banking system emerging over the next decade that takes advantage of what works in places like the US, Europe, and probably China, and what is failing in these developing markets where they may actually become completely Bitcoin centric, which makes total sense, especially when you have a currency you can subdivide down to 8 decimals. I predict that in a few years in a lot of developing markets, you're going to hear people quote prices in Satoshis. Makes no sense to quote a price in Bitcoin where it's 0.000. But if you can say the cup of coffee costs, 0.15 Satoshis, that's going to make a lot of sense to people. And if you can pay for it in a fraction of a Satoshi, which is effectively zero, why wouldn't you do that when you have no other currency? But in the US, we'll simply borrow against the Bitcoin and continue to use the Visa rails that we have that work just fine.
Bill,
So
can I break in when you get a moment?
Please.
I have 2 things I wanted to add. I think are important. One, I think it's pretty important for people to understand that one of the reasons that Bitcoin is an economic imperative, even in the developed world, is that most of the assets that people hold in the US and Europe are currency derivatives. Like if you own a value stock, it's valued based on the value of the discounted cash flows. And if you own real estate, it's valued based upon the rents. And if you own a bond, it's valued based upon the coupon. And so if the currency is losing 15% of its value a year, then you have to apply a 15% discount rate to all those currency derivatives. And you look out 10 years and you realize that even though right now they might have got a bump in this V-shaped recovery or K-shaped recovery, ultimately, if we have a loose money policy in the Western world, then they're all collapsing. And that's why you'd want a non-sovereign bearer instrument store of value that's not based on cash flows. And I would just suggest everybody apply this mental model in their head. If you were running a business in Argentina, and if I told you that the Argentine currency was going to collapse from 3 pesos to the dollar to 150 pesos to the dollar over the next 15 years, and then you try to figure out what your investment strategy should be. Should you own Argentine bonds, Argentine stocks, Argentine commercial real estate, or Argentine cash? Or should you own something else? The answer is there isn't any strategy in a collapsing currency. There is no mix of conventional assets that saves you because they're all eventually going to get ripped down by the collapse of the underlying currency. So the only logical strategy as the currency starts to collapse faster is you have to convert your monetary energy into an asset which is not a currency derivative in the frame of reference you're in, right? And so once you understand that idea, it's a big idea, then the light bulb goes off and you say, well, in 2003, I should convert all my pesos to dollars because that's a stronger currency than the peso. But in 2021, I should convert something to like a Bitcoin because that's stronger than the peso and stronger than the dollar. And it's a frame of reference. So that's the first big idea. And it's important because it plays to the $400 trillion of conventional assets in the world. And it's why Bitcoin is a superior asset because it doesn't have that currency derivative risk and counterparty risk. And I think the second big idea is I do think we're going to actually see an explosion of stable coins. And that means that things like Tether and DAI and USDC are dollars on crypto rails. And we're going to see an explosion. There's probably already $75 billion worth of this stuff circulating around, but we're going to see hundreds of billions of dollars circulating through Africa, Asia. It's already happening in China. People are already circulating on crypto rails, US dollars. And I predict that what you'll see is 5 or 6 billion people with a mobile device, and they'll have a software wallet, and the wallet will have digital currencies and digital assets. And the king currency will be the dollar. And after that, maybe the euro or the yen or renminbi. And then the digital asset will be the Bitcoin and maybe some other digital assets. And sometimes people think, well, if Bitcoin spreads, the dollar has to be replaced. Not really. It's what really happens with money is when you have a hyperinflation of money, if money inflates at more than 5 to 10% a year, you have a delamination of the roles of money, and the medium of exchange unit of account becomes the currency controlled by the sovereign government like the US. Weak governments adopt the US currency like El Salvador. And then the store of value devolves to the asset. And so you have currency versus asset, and everybody in the world is going to want both. They'll want the asset for the long term, and they'll want the currency for the short term. And the strongest asset will be Bitcoin. Another asset is S&P 500 index. Another asset is any other crypto. Another asset would be anything you can digitize. And people will flip between the US dollar and the local currency. You can even see a 3-tier. I have $1 million in Bitcoin. I have $100,000 in US, and I have $1,000 in the local Zimbabwe currency because the government forces me to. And I swap between the three. And common sense is I hold the weakest currency for a week. I hold the next currency for a year, and I hold the asset forever. And that's evolving. There'll be open source things like Lightning Wallet that can run anywhere in the world. And they're what we call open source decentralized. And then you've got PayPal, Apple Pay, Square that are centralized payment rails, and Visa and MasterCard. And a lot of people in the world can't use MasterCard and Visa and Apple
Michael,
Pay.
let me jump in here a second. There are two questions I'd asked you once, and I want to hear your answers, and as well as Bill. The first is to the members watching. When you think about what percent of your assets or your cash, to use that word, US dollars, you're advising your family and friends to hold in something like Bitcoin. Love that. And then second, how do you address the wild fluctuations in price and what the ultimate value could be as compared to a store of value in gold? Can you hit on those two subjects for a second?
For money that you need, like in our business, we have $50 million in US dollar, and we have that as working capital for stuff we think we need in the 12-month period. So we calculate the full fluctuation or volatility of our cash needs over the next 12 months. We keep that in a very stable currency that's denominated in the same units as the obligations. And then stuff we're not going to need, we call treasury, and then we invest in our treasury assets. We invest in Bitcoin, but my advice to anybody would be establish a treasury policy, and the right thing to hold for a decade would be a portfolio of scarce assets that will go up in value in the face of inflation. So I'm biased toward Bitcoin, but if you're not going to do Bitcoin, I mean, for God's sake, buy a nice house you want to live in forever, right? Buy furniture you want to use forever. Buy commodities, that you can use. If you want to buy stock, buy high quality stocks that you think will be able to raise their revenues or their cash flows faster than the rate of money expansion. I would rather own Apple and Facebook and Google, like a dominant digital monopoly that can, Apple can roll out a new product to 1 billion people over the weekend. So their ability to create value is higher. I wouldn't own a 19th century manufacturer because there's no way they can deploy a product to 1 billion people over the weekend. So buy companies that will last for the long term, buy assets that people will want over the long term, buy something scarce, something desirable. Because if I increase the amount of US dollars by a factor of 10, ask yourself the question, will the stuff that I own be 10 times more valuable or not? And I think common sense will answer that question.
That's such a fundamental question that people don't address. So Bitcoin is at 62,000, 6 weeks ago, it's at 37, 38,000 now. The wild fluctuations in price. How do you think about that?
I think that if you're buying Bitcoin with a time horizon of less than 4 years, I don't think you should buy it. No one's ever lost money buying Bitcoin and holding it over 4 years. But if you're buying, if you want something to not fluctuate in value in 4 weeks or 4 months, then you should buy something else. So it all comes down to time horizon. The volatility itself is because it's not controlled. It's a global market. Anybody can trade it 24/7. If people could trade Apple stock on Saturday night in Singapore with 10x leverage, okay, you would have more volatility in Apple stock, right? But so what you've got is you've got exchanges that give you a lot more leverage. You can get, you can read something on Twitter at 10:32 p.m. on Saturday night and panic, and then you can sell it. And then someone else will pile on to that. And there are reasons it's volatile. One reason is because it trades with 10x leverage. No one trades with more than 2x leverage on the US stock exchange with equity. You can't. So it trades with more leverage. It trades everywhere in the world. The other reason it's more volatile, Peter, is because it's property, not a security. And that means it's not subject to the 30-day wash rule. The IRS says if you were to dump Apple stock right now at a 20% loss, you have to wait 30 days to buy it back. And so you would think, well, I like it long term. So I think I'll take my lumps and I'm just going to hold it. I'm not going to trade it. You can't dump it on Saturday night while you're drunk. You can't dump it on 10x leverage, and you can't dump it on Saturday night with 10x leverage and buy it back on Sunday morning. You see? But okay, so Bitcoin and crypto in general, it's the Wild West. It's true price discovery. It's true freedom. There is more volatility. We could say, oh, this is a bad thing, but is it really a bad thing? Because on one hand, you would say the hedge funds will sell $1 billion at a 20% loss, knowing they can buy it back 4 hours later and harvest the tax gain. You could say that's a bad thing, but you could say that's a good thing because hedge funds everywhere in the world think this is a much more favorable asset class to trade.
So let's do a calculation for the group here. Simple math about if Bitcoin achieves a store of value similar to gold, what the price ends up being.
It goes to about it depends on how you look at it, but anywhere from $300,000 to $500,000 a coin. Gold's like a $10 trillion asset class. Some of it's jewelry though, 4 billion, 5 billion is jewelry. So the monetary portion of gold is $5 to $6 trillion. And so that means Bitcoin goes up to 300,000, 350,000 if it just replaces that monetary supply.
Bill, you want to add anything about the fluctuations and volatility in price and
yeah, so we talk about this all the time with high net worth clients. We talk about time horizon constantly, and I agree. I mean, we usually quote 3 years, but if your time horizon is less than 3 to 4 years, you're doing it for the wrong reason, and you're going to be disappointed at some point, right? But when you have an asset class that's going up 100 to 300% a year, and versus another asset class in the dollar or fiat currencies, which are basically being printed into worthlessness. Right. So what is it that you're trying to accomplish? We run our treasury at a much smaller scale, the same way Michael's talking about. We're profitable. So we keep a certain amount in cash. We generate our revenue in Bitcoin and we're comfortable leaving it there because we want to be the crypto bank for people for the next 100 years. And we're putting our money where our mouth is. And it's been great for us. But again, we tell people, if you're day trading Bitcoin, right? And you don't know what you're doing, you're probably going to get wiped out, especially when there's people who are trading with, it's actually not even 10x. You can actually trade with 100x leverage, which, for most Americans is just complete insanity. But that's the reality. The second thing I would say is we're on the front lines as early Bitcoin holders towards the creation of a new asset class, a digital asset class that didn't exist before, that's growing exponentially. You need to look at, to truly understand this, in my opinion, you need to look at the price of Bitcoin on log charts, not linear charts. It's very difficult to look at hockey sticks and then, not expect or even to fully appreciate what's going on when you're on the front lines. We've never had a new asset class created like this before. So when I explain it to people, I take out a log chart and say, look, a 25, 30% pullback in price is irrelevant when you've got a system that's being adopted exponentially, but has a finite, as guaranteed finite scarcity, right? And we've never had that before. So it's first of all, it's difficult for most human beings to get their mind around exponential growth or just compound interest. But now we're talking about something going up 200% a year. It's very difficult. Right.
So we're going to go to member questions now. Really, Justin, you were patient. Please jump on in.
Yeah, thanks. First of all, I can imagine Peter and Michael's fraternity. Wow, that had to be some interesting conversation.
It was an intense place.
It was.
Yeah, wow. Whew,
it was very intense.
Yeah.
And Peter and I are both Aero Astras too.
Yeah.
Right, there you go.
To the moon.
I used to cheat off of Michael's problem sets because he's just smarter than I am.
He's a liar.
Right,
he was 4 years ahead of me. I looked at all of his course notes and problem sets. Yep. I had the benefit of him going first. Go ahead.
Yep. There you go. Sure. No problem. So it's interesting. I'm a simplifier. So I like to simplify things. And, I look at the San Jose Sharks, first NHL team. You talk about hockey sticks, Bill, they're the first NHL team a couple of days to adopt Bitcoin. And you saw the Ivy League last year in the spring was the first big league to shut down everything because of COVID. And then you look at El Salvador to be the first country to adopt, legal tender Bitcoin. So you have the wealthiest elite at one end, and then the poorest of the poor, right. Like you said, Bill, the black and white, and in the middle. So my question is, where does the gray start to come in, and how does it get adopted to the gray? Meaning, is it more teams like the NHL Sharks or the NBA's Kings or the Oakland A's, which they have adopted Bitcoin or cryptocurrency in some aspect? Or is it, I've seen Bitcoin machines in gas stations a few times. Is it that? Like, what's the mechanism to getting it to not the poorest of the poor, and not the wealthiest of the wealthiest, which is most of the people in this room, but where's the middle? How does it get?
It's already happening. It's already happening. Look, it's the fastest adopted technology in history, to my knowledge, right? I mean, Michael, correct me if I got this wrong, but I've never seen the internet itself, right? It was not adopted. Smartphones, which we referred to 10 years ago as the fastest adopted new technology on the planet, right? We're not as quickly adopted as Bitcoin is being adopted now. I believe we're at about 160 to 175 million Bitcoin wallets that are out there. Obviously, they hold other cryptocurrencies in addition to Bitcoin, like with Abra, but it's happening already.
I think, there's one important point to make. It's an open protocol that's permissionless, which means that any company on Earth and anybody can adopt it anytime they want. And so, to Bill's point, I think we're adding 3 million people a week.
At least, yeah.
3 million a week. And it is spreading faster than anything else. It's the fastest growth of a digital network in the history of the world, faster than Google or Facebook or Apple to value. But now, how does it spread? Well, look, like MicroStrategy, one company starts buying it, and now every one of our shareholders, every one of our employees, every one of our debt holders, I just saw a bond issuance and 100 institutions, and they collectively represent about $20 trillion of assets participated. So one way it happens is corporations get involved. Another way is all the banks are getting involved, and the banks will deliver it. I think Coinbase added 1 million accounts a week. Bill's company's adding millions of accounts. Binance is. Square is adding millions and millions of accounts. So it's going to be spread by big tech. Ultimately, I think that the most powerful dynamic's going to be 6 billion mobile phones with Bitcoin software or Bitcoin assets on the mobile phone. I mean, that's how you really deliver it to the world. But you can't underestimate the power. Like when an insurance company buys Bitcoin and they've got, or Fidelity's got 20 million customers, an insurance company's got 50 million customers. When they buy Bitcoin, you just delivered an insurance policy that's a derivative of Bitcoin to 50 million people, right? If a government, let's say government, if El Salvador buys Bitcoin, then any currency issued by El Salvador becomes a Bitcoin derivative. Like, here's a good idea. Turkey goes and prints Turkish lira, buys billions of dollars of Bitcoin, announces it, and now everybody in Turkey is carrying Turkish lira, which is a Bitcoin derivative. It's backed by Bitcoin in their pocket. So this spreads in lots of different ways. Every corporation, every government, in essence, can create derivatives of Bitcoin simply by owning the Bitcoin on their balance sheet. And every big tech company can build Bitcoin and the protocol into their software. And is there any one? No, there's like 10,000 entities that are acting simultaneously, independently. You know, there's stuff going on in Korea and Japan right now, and Singapore and China we don't even know about. And the beauty of Bitcoin is, you saw the president said, we're just going to take our volcano and we're going to punch a hole and we're going to vent out 95 megawatts of power. 95 megawatts of power will generate 3 exahash, which will give you 3%, almost 3% of the revenues of the Bitcoin network, which means 3% of $20 billion, right? So you're talking about $600 million a year from a volcano. Did anybody ask permission? No. Can you do it in Iceland or Greenland? Sure you can. Can you fire up a nuclear reactor in Siberia? Yep. You know, can I keep track of it? Nope. Can't, not even trying. It's the power of a decentralized permissionless protocol. People that and here's the other irony, Peter, I'll make this, I apologize, but
dude, don't apologize. You're changing.
If you got $1 billion, if you have $1 billion in New York and you put it in gold, you're depending upon the mayor of Manhattan and the governor of New York and the United States government to protect your $1 billion. If you have $1 billion in Bitcoin, then there's going to be a Bitcoin miner in Siberia and another one in Sichuan and another one that might be in Venezuela, and they're protecting your $1 billion. The enemy of your enemy of your enemy is actually protecting your asset without even knowing that they're doing it, because somebody in China thinks he's got extra hydroelectric power and they just want to utilize it. So the incentives of Bitcoin are to drive everybody everywhere on earth to do innovative things all the time without asking permission from anybody else. Instead of having a chain as strong as its weakest link, the chain is as strong as its strongest link. One last point. There's a basis trade in Singapore. You can sell the forward future. You can buy the spot. You can lock in 35% overnight interest. Americans can't do it legally. But if you have a pool of billions of dollars of capital in China or Russia or Cayman Islands, you can go get 35% overnight interest. And if you live in Alabama and you take 1 Bitcoin and bury it in your backyard and don't think about it for a decade, you're getting the benefit of some trader in Russia or China or Hong Kong taking advantage of that trade. And so it is truly a beautiful global network where money managers are driving up the value of your asset, and then Bitcoin miners are driving up the security of your asset, and you can be asleep for 30 years and somebody that you don't know in some place you don't know will do something that's illegal in the place you live without you knowing it, to your benefit.
Amazing.
That's Bitcoin.
Michael, I hope everybody is appreciating why this is such an important conversation. Joe Honan, you're next.
Hi, thanks, Peter. Hey, Michael and Bill, I enjoyed both of your talks at the Bitcoin conference last week. Appreciate that very much. I wanted to ask you both, hopefully a little bit of a sensitive question, because I want to amp up the conversation here a little bit. So Michael, for you, I'd love to understand what your view about this whole Bitcoin maximalism, one coin to rule them all kind of scenario is versus other altcoins. Many of them have outperformed Bitcoin over the last 12 months. So I'd love to understand that. And then for you, Bill, things like MetaMask and these decentralized wallets that aren't centralized. I'd love to hear your opinion on that, and if you think that is a threat to your business over.
Yeah, sure. Let me address the first one. I think you've got crypto assets and you've got crypto applications. And the idea of a crypto asset is I want to put $1 billion on a network that'll be here 100 years from now. So I'm all about durability and integrity, and I don't want anybody to mess with the functionality or to break the thing. And so I don't want any more functionality. I just want to put $1 billion on a coin and wait 1,000 years. And 1,000 years from now, you could make these incremental security improvements. But the truth is $1 billion of money now and $1 billion of money 1,000 years from now, it's fine. So the theory behind Bitcoin is optimize the architecture so it doesn't change, it's secure, it's high integrity. And all the functionality is on the layer 2. And so the functionality, which is applications, performance and functionality, speed, you can get that from Square Cash App. That's a compliant app, and you can move 1 billion transactions a day for free. It has to be compliant, and you trust Jack Dorsey and Square. Or you do it on PayPal, or you do it on a Visa, or you do it on a MasterCard, or you build an application with the Lightning Network. The Lightning Network is a decentralized staked network where you stake Bitcoin in order to do 1 billion transactions instant, fast, and you build functionality. Each of those by the way, you can also use Ethereum or use any other crypto asset. So I could, if I wanted to move money privately, I could flip it from Bitcoin to Monero or Bitcoin to Zcash, and I use their functionality. And if I wanted to do smart contracts or DeFi, I could flip from Bitcoin and I could wrap the Bitcoin in Ethereum or go to Cardano or go to Binance Smart Chain or go to Solana. You have a whole set of applications. I think you have decentralized applications. We'll call those crypto apps. And the idea is I do proof of stake because I need super high speed and I can't afford a proof of work. And those tend to be more centralized, but higher performance. And then you change and upgrade the functionality. There's an entire market dynamic. Nobody knows whether Ethereum beats Binance Smart Chain or whether or not Ethereum destroys central banking or fractional reserve banking. I don't have an opinion on that. I do have an opinion that there's a layer 1, which is just give me $1 billion bearer instrument asset. And if there's an open protocol, then all the functionality should come from the layer 2. And as Gary Gensler would say, you have basically permissionless blockchains and permissioned blockchains. A proof of stake is sort of more permissioned. It's higher performance. It's more decentralized and more fault tolerant than a centralized conventional app. And there are a lot of benefits there if you want something like that. But we're not going to shut down Visa or Apple Pay either. And so I would say Bitcoin serves this role as like a long-term 100-year-old store of value. And if what you want is that integrity and trust, and you don't want people monkeying with the system, then that's Bitcoin. If you go to Ethereum, they're changing the system all the time, right? I mean, they're going to go from Ethereum 1.0 to 2.0. And if you listen to Charles Hoskinson, he'll say, next quarter, we're releasing this feature, and next quarter, we're releasing this feature. And so those are decentralized but quasi-engineered pursuits of technology functionality. And the idea of money, base layer money, is why couldn't I just have 1% of all the money in the human race for 10,000 years without changing the functionality, right? So they're different things and they're engineered to a different purpose. Ultimately, the applications will live or die based upon competing with other application functionality. And the assets will live or die based upon who's got the best asset. I don't think I would say it's impossible to have other assets. Like the Chinese could create a crypto asset that might sit out there, but an asset that's deflationary looks on the surface better than one that's inflationary. Bitcoin competes against Bitcoin Cash, same kind of architecture. I like one better than the other one. Other people might like the one that moves a little bit faster with a higher block size. The marketplace determines it. And in terms of overall architectures, Look, if I create a virtual currency in a virtual world and I create a virtual network and give it to my virtual friends, and if they stake that virtual currency to create virtual security so I can trade virtual products, I'll be virtually successful until one of my virtual friends copies my virtual idea, which is virtually certain. Okay. And so that's like Farmville or Second Life or Fortnite. By the way, you can't say they're not successful. Fortnite is successful. It's a game. You can't say, casinos have casino chips. They're successful. You can have a DeFi.
Michael, I want to get through the other questions. So I'm dude, I can.
Yeah, so I'll shut up on
I
that.
can wind you up.
There's a market dynamic here, and the market has a place for all these things. I don't think you can dismiss them. I just think they're going to sort itself out depending upon what you want.
Yeah, agreed. The functionality. Bill, your question.
Yeah, so look, I agree in terms of the store of value role for Bitcoin. I see myself as I have a simplistic perspective for store value. I think it's the Sistine Chapel of cryptography of mathematics in terms of Bitcoin being able to be the ultimate store of value. And so I put that aside and say, look, I want that to evolve at as slow a rate as possible. If it works, don't break it, don't fuck with it. However, there are other applications of, Michael referred to them as crypto apps. And we're in inning one of understanding what the potential there is. Is Ethereum going to enable them at scale, right? So, obviously stable coins being one that we've talked about, right? All built upon mostly Ethereum, and others like Stellar and other networks are starting to come up. DeFi applications, which might replace applications of centralized banking, insurance, other services for yield generation, which may actually move to Bitcoin at some point, but haven't yet, right? Arts, collectibles, you've referred to them as NFTs sometimes, all basically also being built on competing layer one protocols like Ethereum, Wax, Solana, et cetera, et cetera. And our take is that is going to be a massive market, which is getting, for me, as somebody who's been at this, from my Netscape days to now, the developer support tends to be a key indicator for me, right? And if you look at where developer interest is going, it's moving in the direction of these crypto-based apps. Bitcoin doesn't need a massive army of layer one protocol developers, right? It really needs stability. It needs to be secure. It needs to be reliable, right? Crypto apps, to figure it out, is going to need the Charles Hoskins, named developers.
Rapid experimentation.
Start some massive radical experimentation. Exactly. And the other question about MetaMask, as kind of a user interface, right? This is indicative of where we are. The average person cannot use MetaMask. It's too complicated. Right. So one of the things we're looking at Abra is how do we actually create user experiences that are viable for the average consumer to be able to take advantage of decentralized applications at scale? But we're so early, right?
This is still, guys, we're still in the deceptive phase going to disruptive, right? I mean, we talk about this whenever you digitize something and enters a deceptive phase, and then 30 doublings later, it's a billion-fold improvement. It's, disruptive,
you don't feel it happening.
Monetizes, democratizes, right? So that's what we're doing in this regard.
Right.
Can I go to Ken's question next?
Real quick, I'd love to say to Bill, I've used Abra for 4 or 5 years, probably 5 years since I saw you at A360 many years ago, and it's a fantastic app. So I'm one of your AUMs on that. So it's
appreciate that. Appreciate that.
Ken Sim, you're next.
Hey, thank you so much. Questions for all three of you, Michael, Bill, and Peter. If you have a long-term view, what mix would you sort of put in Bitcoin versus Ether, and why?
Long-term being 10,000 year, or long-term like a couple 100-year lifespan, which?
A couple of 100 years.
Well, I'll go first because my answer is simple. I think Bitcoin can go up by a factor of 100, and it's 100 times less risky than everything else. And the human race needs a base layer digital gold money, and base money is a winner take all phenomena. So if the addressable market for base money is $200 trillion and you've got one solution and it's first, the path dependent suggests that it goes to 200 trillion. So everything else is 100 times riskier and 100 times smaller. So it's 10,000 times less compelling. So 100% Bitcoin, 0% everything else, and then wait for the other 10,000 applications to find their home. And if something's as successful as Google, it's worth $1 trillion or 2 trillion. But I'm thinking that there's only one thing that's been invented in the history of the human race that's worth $200 trillion, and you're staring at it. So why would you squander your capital on anything that is less compelling when you have the single? It's like I invented electricity and you can own 1% of all the electricity the human race is ever going to use. Or you're John D. Rockefeller, you can own 5% of all the chemical energy or oil the human race is ever going to use. Or how about 5% of the fire we're ever going to burn? I mean, the way you get really rich is own the thing. And so
How do you really feel?
that's what I think.
Bill, where do you end?
Yeah, I'll give you. I have a more. Let's call it a more nuanced answer. But I would say, look, I'm going to give you my perspective on the crypto part of a portfolio, and you can decide within that which piece goes into crypto. Because I've got friends that are 100% in the model I'm describing, and friends that are 1% in the model I'm describing. I think for me that 1 versus 100% comes down to time horizon and basically emotions, right? If you're the kind of person, regardless of time horizon, who just can't deal with the volatility, can't think in terms of looking at a log chart versus a linear chart, then you need to move towards the 1% scale until you basically can adjust your emotions to deal with what I'm saying. So within that, I'm going to be 90% Bitcoin, probably 10% Ethereum. And then separately from that mix, and the reason is because right now Ethereum owns everything that's not true store of value, right? And I also, for my cash, I will put that in. I will hold more cash right now than I normally would because I'm earning 10% on it. If I can't safely pay that 10% interest, I'm going to dramatically lower the amount of cash I'm holding. And so, I am totally comfortable with having 70% of my, net worth in Bitcoin, and, let's call it another 10% in Ethereum, the rest in everything else, with a small amount of cash earning 10%. And that's what I tell everyone. Yeah. And I say, if you can't handle the risk, and if you can't stop staring at the charts all day and the price all day, then you need to adjust your mindset, because you're either not thinking long-term enough, you don't understand well enough why you're doing it, right? Don't do it because Bill said put 70% in, or Michael said put 100% in. You need to understand what sound money is, how inflation erodes the value of your money over time, what an asset is versus a currency, right? If you can't understand that, then you're never going to get past the emotional issues that I'm talking about.
Yeah. Trent, you're next, pal.
Thanks, Peter. I have a couple of questions. The first one is I wanted to hear your thoughts about wallet security. The reason I bring this up is I have a Ledger wallet that about 6 months after I had put all my crypto on it, I received a couple messages through Ledger that there were 2 different attempts of somebody trying to access my wallet from China, and they told me what to do in that scenario, and everything ended up okay, but that just gave me pause as far as what's the actual security of what's on my crypto, my hardware wallet. And my second question is that I think obviously a very important part of Bitcoin's case for being a store of value is the fact that there's no one person or entity that's in charge of it, and no one can produce more than the 21 million Bitcoins. And my question is this exclusive to Bitcoin? Since I know most other coins can be, printed, if you will, or they can be altered by either a person or a company or group. So is this exclusive to Bitcoin, or are there others that also have the same protocol?
And by the way, can I just say one thing while I'm on this? If you're watching on the YouTube link, please, we've had some scam artists on past transmissions we've had where people are saying send 0.3 Bitcoin here and I'll send you Bitcoin. please be careful. Don't fall for any scams.
No viable service provider will ever ask you to send Bitcoin to them for any valid reason whatsoever. It doesn't exist. Don't do it.
Okay, so quickly answering your question, I think Bitcoin's by far the most decentralized, crypto network in the world. And if I look at the monetary universe or the economic universe, I think that Bitcoin is the single most predictable, most stable, highest integrity body in that universe. So if you're asking me about the volume of any stock, any index, any credit, any real estate, any currency, or anything on earth, I think that the one thing that's more certain than any of those things is 21 million Bitcoin is the limit. And I think it's properly decentralized in such a way that I can't see anybody in the world with the power to change that. And that I think is important, because that gives you the fulcrum. If I have a lever long enough and a fulcrum on which to place it, I can move the world. Bitcoin is the fulcrum against which you can apply leverage. Other things aren't. My second observation on the wallet question, there's hundreds of different approaches. I would tell my father, buy a grayscale stock and don't actually hold your keys, because he can't. If you're, other institutions by nature are going to either want to own a fund, or institutions will want to own their Bitcoin with an institutional grade, audited, Sarbanes-Oxley compliant custodian, because they have to. If you're high net worth office, who knows? Maybe you'll want to take personal custody. Maybe you won't. If you choose to take custody, you could do it. You can buy it, smash buy it on Square Cash App. That's a very simple experience. You can do it on exchange, a more complicated experience. You can try to do it in a hardware wallet that's more complicated. You can try to memorize a 12-phrase seed key. That's more complicated. 24 phrases is even more complicated. Is there a right answer? No, there's not a right answer. What I would say is, you got the crypto anarchists that are on one end of the scale, which is they're ready for the entire meltdown of every government on earth. And God bless them. We need them, because they keep everybody honest, and their conviction and their integrity is what prevents the corruption of most of the rest of the network. But I would say the optionality to take custody it's like they say, I have a gun, and I have a gun. And for the rest of my life when we're together, I have a gun, but hopefully I don't ever shoot the gun. Right. So if you have the option to leave, people treat you better. If you have the option to take custody, they treat you better. If you should take custody, you can take custody in 100 different ways. There are some things that are complicated and risky. Right. I know people that, have cabins in the woods with machine guns and 3 years worth of food. And I believe in their freedom. They should have the freedom to do that, but I don't choose to do that. So
let me maybe
I don't think you have to self-custody in order to own Bitcoin, but I would suggest you're in a better position when you buy it to have the option if you can. But even then, look, you're an insurance company. I'd rather the insurance company buy the fund, because it's better than not buying it, and they can't do what an individual could do. And we just got to.
Bill, you were gonna add on to that, and I'm gonna go to Gary next.
Yeah, two things. One, I had the long hair, I had the earring. I was a cryptographer. I was part of the cypherpunk movement on the mailing list in the 90s. So I agree. We need that community. Two things I would say. One, this all comes down to the fact that Bitcoin's best feature is its lack of centralized governance, right? Which means that there's no benevolent dictator that's going to say, oh, half the Bitcoin's disappeared, so we got to raise the limit to 42 million Bitcoin, right? That lack of benevolent dictator means it moves at a snail's pace, a slower than snail's pace, and it will forever. And that's a feature, not a bug. Okay. Many people think it's a bug. I actually think it's probably its best feature. Okay. Two, in terms of personal custody, right? Obviously I'm biased towards Abra for both retail and institutional clients, but I think our best feature is, in that regard, personal control. You don't use a service that doesn't let you move the crypto off if you want to, or on when you want to, whether it's Abra or anybody else. Right? For most people, ledgers are simply too complicated. The only people I know that successfully do that are very like technically astute, can deal with the nuances of a ledger. Every time I have a degree in computer science, every time I use a ledger, I got to relearn how to use it. It's just not meant, those little tiny displays are not meant for the non-techie, in my humble opinion. But if you are going to trust someone else for what is meant to be a trustless system, then make damn sure you can get out when you want to, as well as easily as you can get in when you want to, and test that. Right?
Gary, your next bell. Gary? Yeah, go ahead.
First, thank you very much for this morning. It's been very informative. I'd like to hear both of your opinions with regard to U.S. regulators and where we stand right now, in particular with impairment rules with the SEC and also with the IRS, and what some of these activities are, what pressure it's putting on those regulatory agencies such as El Salvador, Japan, and other countries.
Yeah, I think it's going to be Bitcoin's legitimized as a digital asset. And I think there's consensus forming everywhere in the world that it's a digital asset. I think that the decision that would be a digital currency is much more controversial. In El Salvador, they designated a currency, but I think most places in the world, it will be designated as an asset, not a currency. You can expect to have it deemed as property or a commodity. You'll have tax rules. You'll pay capital gains tax, short or long term, when you transfer it per any other asset. And I think you can expect AML, KYC regulations around regulated custodians comparable to any other asset. If you're going to hold $1 million worth of stock or $1 million worth of currency or $1 million worth of Bitcoin, you'll probably have the same disclosure obligations. I think the good news is we're past the point where there's a question of whether it would be banned. It's very clear that it won't be banned as property or as an asset as long as you hold it, subject to AML KYC. I think there's a lot of debate back and forth over how much AML KYC there'll be, and there'll be a lot of noise there. And I think that I don't think most of the world will adopt it as a medium of exchange. I think the medium of exchange is going to be the dollar. I think that we'll do transactions on high-speed payment rails with dollars. I think that we will store in our investment accounts Bitcoin and as a long term. And as for the other things like impairment, the GAAP, FASB right now requires that companies treat it as an indefinite intangible for GAAP accounting. There's a movement afoot to get them to review that. Tom Emmer wrote a letter signed by 7 congressmen to FASB. I think we'll see what happens there. Anything could happen. The consensus of I think most people in the industry is that FASB should review it because the last time they really opined on it, they simply took the most conservative treatment because no one was really using it.
Yeah.
Bill, you want to add anything there?
Yeah, a couple of things. I mean, one, I think we have a lot more regulatory clarity than people think. We deal with, users in 100 countries. I meet with central banks all over the world. Most countries, the storage of crypto is dealt with via e-money and money transmission licensing, which implies KYC and AML rules that Michael was alluding to. The SEC does not oversee Bitcoin. The only time the SEC is involved is if there's some attempt to securitize Bitcoin, such as with the Grayscale product or with hedge funds that are largely unregulated because they deal with accredited investors, or more importantly, with these pending ETF applications, which up until now they have not been willing to approve. But eventually, I believe they will. And in most countries, they also deem Bitcoin a commodity, and the virtual currency rules tend to apply again, which puts you in well-defined e-money or in the US MSB money transmission regulation.
Thank you. Let's go to Judy next. Judy.
Superb conversation. And I think the points just recently about the clarity on currency versus assets helped me a lot. Question, in the developing countries like African nations, we're really seeing an emergence of financial data API tech companies to merge, citizens permissioned. Maybe the data hasn't been collected yet, and merging that all together so they can get access to financial institutions. And I think you've said Bitcoin applications are more for, longer term assets, but do you see a risk of this emerging technology on the API front being leapfrogged? And if so, in this deceptive to disruptive, how long do you think that would take to happen?
Yeah, I don't think so. I think it's like TCP/IP. It's a base layer protocol, and all the innovation and all the risk is being taken at the application layer. So the leapfrogging is going on between PayPal and Square and Lightning and Ethereum and Binance Smart Chain and Solana and everybody else in the space. And there's a massive war over who's going to create the most compelling applications. The underlying base layer of Bitcoin would allow if PayPal wanted to settle with Square every 4 hours for $97 million, they can do it with the underlying blockchain. So what you just need is a base layer monetary protocol to allow hundreds of thousands of innovators to do their thing. And they are, right? In Zimbabwe, you'll have a regulated mobile app in Zimbabwe that'll be using the Bitcoin protocol, and they'll be compliant to Zimbabwe, and then the government will change the rule and they will change their app, and they will fail and they will succeed. It'll be a free for all. But I think that the key with Bitcoin is they perfected a digital monetary network for the first time in human history. It wasn't the first try. It was just the first successful one. Now it works. Now everybody has a frame of reference and a protocol, and it's spreading like wildfire. And so, no, I don't think the protocol gets leaked. I think the key is it's like English language. It's, once you have the language, companies come and go, people come and go, governments come and go. The language, it kind of evolves a bit, but it's pretty sticky. Or, when I was a kid, they were trying to switch out the English system for the metric system. That was 50 years ago. That was going to happen presently. It still hasn't happened in the US.
I remember that.
Check your wall jack and look at the electric power plugs in the US versus Europe and ask yourself, when's that switching? And the answer is the protocol is just incredibly difficult. Is it the best one? No, it's not the best one. Like there's always a theoretical better one, but if a billion people all agree on the protocol and it gets trillions of dollars of monetary energy behind it, it's good enough. We all move forward, and then you bridge the defects at the application layer. Square Cash App will move 1 billion transactions a day for free on the Cash App. You don't like that? Well, then try it in Lightning and then let the market slug it out. But there's a lot in it. Here's the big idea. People should take risk with the application layer. Don't risk all the money on earth by screwing around with the base layer.
Right.
That's a beautiful way to.
If Bill's going to crash his company at Abra, he can do that at his layer, but he shouldn't destroy everybody else's money. Right. So that's the idea behind the protocol. That's why it's.
I'll try to do neither.
Yeah, I was going to put that.
I'm sure you'll do neither.
Yeah.
Thank you. And I'm from Canada, where we're still a mix of metric and imperial.
Yeah.
Right. Yeah.
Let me go to Guillermo, but before, let me just inject one thing that I don't know the right place to put it, but we'll use this webinar as a point in time to say we're going to accept Bitcoin for A360 memberships. So I just want to plug that out there. It's time that we start using this as a medium of exchange as well. Guillermo.
Thank you, Peter. Amazing session. Hi, Bill. Hi, Michael. Two quick questions. One is about DeFi. We have seen, like in this 50% drop, DeFi projects have performed pretty good. So how are those projects that are giving 130% a year, like PancakeSwap or Cake, against other staking options? So how trustable they are based on the amount of APY that they are offering? That's the first question. And
Sure.
Second, which would be two stocks that could correlate with Bitcoin for people that have to do collaterals or stuff like that, that the banks are not accepting Bitcoin assets as collateral, but you have to put it, just for not to put it on a bank account, you have to put it on the stock market, maybe for looking at your money performing as it's there as a collateral.
And Bill, when you're addressing DeFi, can you take a second and just, for those who don't know, give us a simple explanation? If you're
Sure, I'll pump Michael some more and say, hey, if you want exposure to Bitcoin right now, MicroStrategy stock may be your best bet.
I was gonna put that plug in.
I don't know if Michael's allowed to say that.
MSTR.
So I'll say it for him. MSTR, and alternatively, of course, you can buy the Grayscale trust, which might actually not be a bad time since I think it's still trading at a discount. And they have an ETF application pending, but I have Michael and I are not involved in each other's companies directly. So I'm okay, I think, in saying that on the stock question. On the DeFi question, decentralized finance is an attempt to use effectively what are called smart contracts to replicate aspects of the traditional centralized banking system. And the question that I think Guillermo was asking was related specifically to contracts that are used to generate yield, meaning you put into a contract a certain amount of an asset like Ethereum or a dollar stablecoin, and you get out more than what you put in. How is that happening? Okay, so the simple answer is the most important reason that's happening is that these protocols are creating their own new tokens, like Cake, like Pancake, and they're actually paying you in those new tokens, which are usually, in the case of the bigger ones, liquid right away, so that you can change it from their smaller Agave or Pancake token into something like a stable coin. So you're not going to take long-term risk in holding some other token. Okay. The challenge with DeFi, and this is why I tell people to tread very carefully, especially if you're not a technologist, okay, is that when you create a smart contract on these systems and you put that contract out there that promises this yield, if there's a bug in that code, okay, that bug by definition is now a feature because you can't change it. You can create a new contract, but any money that's sitting in the old contract that you can't get out, could be stuck forever. So tread very carefully. And I would always only use DeFi systems in very small amounts initially. Look up, code audits. And if you don't know what you're doing, let us do it for you, right? And for the vast majority of the people who are never going to be able to read smart contract code, you're better off with, Abra or one of our other competitors that will help you generate that yield using DeFi, as opposed to, going after what looks like too good to be true numbers, which often are. So tread very carefully with DeFi in general.
Yeah, my take on the space is Bitcoin is just a base layer asset, and you can build applications in central and traditional banks like a JP Morgan or a Morgan Stanley. They can actually become banks in this area. They're not right now, but they will eventually enter. You'll see companies like Square and PayPal, they're getting in the business. They're another way to bank it. You'll see, you see with Abra and you see with BlockFi and those types, you see companies that are either giving you loans or giving you yield against Bitcoin. All of those are part of the emergent Bitcoin banking industry. It's early days. It's the first decade. And so it's very early. I mean, Genesis and NYDIG are commercial and forms of Bitcoin banks. On the DeFi side, in the crypto world, they have constructed their own surrogates or their own model of banking, and they do it with decentralized systems. And they're all competing, right? People will say the only way to generate yield is with DeFi. Well, not really. You can generate yield in CeFi or DeFi.
Right.
It just comes down to how you want to do it. If you don't own a bank, and if you don't have capital, then maybe you want to create your own bank in cyberspace and you go the crypto route. And if you're Fidelity, you could go the other route. I think the market will determine those. If you're investing in any of the other cryptos, you're investing in a crypto venture. At best, it's an investment like in a stock. At worst, it's an investment like a venture capital investment, and the risk and the complexity, is much higher by orders of magnitude. So if you're a professional and that's what you do for a living, then maybe you should play in that space. I wouldn't tell my sister or my brother if they needed a loan against Bitcoin or yield against Bitcoin to go do that. I would say go to Abra or go to BlockFi or go to some, and if they're hyper conservative, I would say just own Bitcoin and wait a year and or wait 2 years until everybody's old and proven in the space, and then at some point creep into some of the more interesting opportunities.
Yeah.
Everybody's got to decide their risk tolerance.
Yeah.
Right.
You know, I'd probably just one comment. I would maybe take a little contrarian perspective over what you'll probably hear in the marketplace. And that is, I actually predict that you're going to see a lot of DeFi applications built on Bitcoin eventually. I think that as these layer 2 protocols that we've talked about, Michael mentioned Lightning, I talked about Lightning earlier, become usable, you're going to start to see sidechains and other projects that actually use Bitcoin for this as opposed to Ethereum. It hasn't happened yet because it's too expensive for small dollar applications, but I predict it's coming. And I think it's going to be super exciting to see some of these banking applications run directly on Bitcoin.
And if I could piggyback on that, I think there's one important point to make about durability, integrity, and stability over long periods of time. The reason that Bitcoin is a stable network is because it's staked with energy capital. You need a volcano or a nuclear reactor or a wind farm to run it. It's staked with political capital. You need a nation state or a governor or mayor to endorse it to let you run the Bitcoin mine. It's staked with technical capital. You need to buy hundreds of millions of dollars of hardware to run your Bitcoin miners. It's staked with energy engineering capital and human capital. You have to build these Bitcoin mining centers, and it takes years to do it, and they're complicated. And it's staked with time. It takes 4 years or 3 years to set this up, and it's staked with financial capital from Wall Street, like US dollars. Bitcoin miners are raising hundreds of millions of dollars to build Bitcoin mines. So Bitcoin itself is sitting on a pyramid, and underneath Bitcoin is US dollars and people capital and political capital from everywhere in the world and a lot of time. And so that's what makes Bitcoin stable. What makes Lightning stable is Bitcoin stakes Lightning. You know, the reason Ethereum is somewhat stable is the Ethereum network has proof of work, and it took them a long time to get there. But if I create Michael Saylor coin tomorrow, and then I stake my network with my own yo-yo coin, then I created funny money, and I gave myself funny security, and it becomes a marketing exercise. So to the extent that a network is staked or is wrapped with an asset that is not part of the network, if Ethereum was staked with Bitcoin, is more stable than Ethereum staked with Ethereum, right? And yo-yo coin staked with Bitcoin or yo-yo network, you know, Square Cash has $10 billion of Bitcoin in it, right? Which makes Square more stable. And we're all more stable if we are relying upon some other aspect of the system. Bitcoin is thermodynamically sound because it takes so much energy and time to run the network, but it's politically sound because I can't sneak a Bitcoin mine underneath the governor of Texas's nose. The governor of Texas knows I got the Bitcoin mine there, and the governor of Texas passes a law endorsing it. And that means I've in fact got Texas or a nation state endorsing my network. And so that's an important mathematical concept here, or conceptual concept, when you're thinking about taking risk over the long term. If your time horizon is 4 weeks or 8 weeks, you know, if you're buying Dogecoin based upon what Elon Musk is going to say on Saturday Night Live tonight, you don't really care, right? I mean, it's a very short-term time horizon. But if you're looking at 100 years, you're thinking, I want nation states to support this. And not all of them all the time, but as long as there's a critical mass of nation states at any given time that support it, then you're stable.
We're going to be going to Deborah, and then we're going to John Brock, and then we're going to our Abundance Digital community for through Nia. So Deborah, you're next.
Yeah, I'm off mute. So first of all, Peter, thank you for doing this. 2 hours has flown by. So
it really has, right? Has this changed the way you're thinking about Bitcoin?
It feels a lot more legitimate and nuanced and in some odd way. But yes, absolutely. And I see many, many potentials for investment here. Yep. Maybe not directly in Bitcoin, but in some of the platforms and functionality that's coming about. But my question is really thinking about unintended consequences, or, for instance, the impact on the environment. So we know that Bitcoin every year creates 11.5 kilotons of e-waste. So with every new technology, there's a good part and there's significant, change that can happen here worldwide. But how do you all think about the negative implications? So, the e-waste, what's happening there, and is there anything that can be done to mitigate that here in the early days?
Yeah, I'll start. First of all, Bitcoin uses less than 0.1% of all the energy in the world and a quarter of a point of all the wasted energy in the world. So 99.9% of the energy issue is something else. And about 1/3 of all the energy in the world is just wasted in general. So if the world doesn't want to burn coal, it solves the problem by just shutting down coal. In terms of efficiency, Bitcoin's the most efficient industrial application of energy the human race has ever developed. If you think about it, we're actually moving pure money on an electric network. So in terms of comparison, $1 in Bitcoin energy creates $200 in value. $1 in Google energy creates $10 in value because they're just moving commodity information. $1 in the S&P 500, if you look at every single company, generates $4 in value. And $1 of energy put into American Airlines generates 40 cents in value. So if you're looking at real energy eaters, it's airlines. And if you want to see, industries that consume energy, it's planes, trains, automobiles, heating, air conditioning. In fact, I think somebody had calculated that clothes dryers clothes dryers in the United States use more energy than Bitcoin. So do Christmas tree lights. So
I think Elon did a disservice by pulling this conversation into the mainstream, right? One of the things that Tim Draper tweeted, which I love, is, have you ever looked at the amount of energy used by fiat money, by the legal system, by Wall Street, by all of those systems are probably orders of magnitude more wasted money than Bitcoin is.
Yeah, some other points. Bitcoin is the highest value use of energy on Earth. The latest Bitcoin miners generate about 40 cents a kilowatt hour in revenue. The typical industrial company in the Western world would pay 10 cents a kilowatt hour in revenue. So if you have a volcano in El Salvador, you can monetize it at 40 cents a kilowatt hour. If you have a geothermal well in Iceland, or if you have a nuclear reactor in Greenland, if you have any stranded power, if you have a dam in the middle of Africa and you want to monetize it, it's your single best hope to monetize stranded energy, to recycle wasted energy, and to catalyze renewable energy. So it's more of a solution to the problem than it is any kind of problem. And if you, there's one last interesting dynamic here. Google can't put a data center in Iceland because they can't monetize all the energy and they need high bandwidth lines. A typical data center like AWS or Google, it needs super high bandwidth, triple redundancy. And so you would never put it 1,000 miles from civilization. On the other hand, with a Bitcoin mine, you could put it 1,000 miles from the nearest human being on a very thin pipe. You could monetize the entire nuclear reactor or the entire volcano, and you could generate prosperity for a country like El Salvador, or you could you want a wind farm, put it 10,000 miles from the nearest human being and let the wind blow, because Bitcoin monetizes intermittent energy too. So it's a pretty effective technology. And in my opinion, the most efficient way to convert energy into prosperity the human race has yet come up with. So it's really sad when people criticize it for being environmentally unfriendly. The only truth is it's the single most valuable use of energy on Earth. So you can justify, you can unmothball any energy plant. But if you choose to fire up a coal plant in Manhattan and the mayor of New York does nothing about it, it's not the Bitcoin network's fault, right? And
right.
What just happened yesterday is the Chinese are clamping down and they're shutting down all the Bitcoin mines running on coal power plant in their provinces, and the network's cleaning itself. So the political process naturally will shut down the dirty power and will migrate all the mining to clean renewable energy where it's politically accepted and supported. So that the problem works itself out over time. if we just let the process work.
Yeah. We should also mention
Thank
the e-waste point that you raised, right? So e-waste is separate just from energy consumption. It's true that the vast majority of energy consumption for Bitcoin is via energy that was being created anyway. There's very little incremental new energy production because of Bitcoin, almost none. On the e-waste side, however, every report that I've read incorrectly explains, and I've talked to the miners themselves about this, and they said they don't understand why people are, they actually don't care because they have no incentive to care. But when I talk to them directly, they're like, we don't understand why these people writing these reports don't understand and don't ask us questions about the basic model for what happens when chips become outdated. It doesn't become e-waste. In the vast majority of cases, when you have a gaming rig, let's just talk about games, okay? If you have a gaming rig that you can no longer play a game on because the CPU or the GPU is outdated, you don't throw out the entire rig, you replace the chips, okay? This is what's happening with the super large mining facilities. They upgrade. They don't throw out all this stuff to become tons of waste. Every report I've read on this has this incorrect. But the miners don't complain because they honestly don't care. They're going to do it anyway. So just because somebody who has an agenda writes that a metal box that's being used on Monday might get thrown out on Tuesday doesn't mean it's true. It turns out that when we dig in, we found out these things aren't getting thrown out.
We should probably take the other questions.
Yeah, let's go to John Brock next. John.
Hey, Peter, Michael, and Bill, thank you for being here. It's great to be on here. I think you've clarified some of this for me, but I'd still like to ask the question. I mean, what stops the U.S. from either banning, creating their own coin, or even pushing this more forward? Because it almost makes them have to be fiscal responsible, and that's almost impossible for most governments.
Yeah, I don't know. Let me just take this one first, because I've spent a lot of time writing about this issue on banning Bitcoin. Look, I mean, at the end of the day, Bitcoin is software. Right? I mean, let's get into the nuances of what it is you would be banning. Bitcoin is software. The Supreme Court has talked about this over decades, right? Software is effectively protected free speech in the United States. Okay, that ship has sailed. Now, China is another issue, as we've talked about before, right? The threat of going to prison when you have a network where every packet is read is a totally different story. Okay, but in a market where you have a very clear delineation between what is free speech and what is not, there's simply no way. Now, you can regulate banks that touch the custodians, but you're never going to have a law that protects that prevents you from storing ones and zeros in your pockets. It's not going to happen. Okay. Yeah, the other thing on the central bank currency. At some point, the U.S. will issue a digital dollar, as the Chinese are talking about. But that will not create, in and of itself, sound policy. That will just allow the government to bypass the banks to distribute currency. The ability to print more of that currency is going to remain. Nothing is going to change. It will just be easier to distribute. That's the only thing that's going to change.
Yeah, I would say that, the government will print currencies and the digital dollar is going to spread to billions and billions of people around the world. And again, it doesn't really threaten an asset because the currency is the currency, the asset is the asset. And there's not a single politician that I can't find anybody on record, by the way. It's not illegal to own Bitcoin in China. Bitcoin is not banned in China. What's banned in China is the conversion of Bitcoin on the fiat exchanges. It's not even illegal to do Bitcoin mining in China. They're doing Bitcoin mining in China. They just don't want people to do Bitcoin mining on dirty coal or to steal the energy. So unregulated mining and unregulated uses of the asset are banned. Otherwise, in every place in the world where people talk about bans or clampdowns, it's legal to own the asset. And it's legal to own the asset in the U.S. And if you look at central banks, Jerome Powell, Christina Lagarde, the deputy governor of the Bank of China, and Mark Carney, the head of the Bank of England, have all stated on the record it's an asset. And if you want to really understand where the regulatory environment's going, if you go on YouTube and you Google blockchain and money, you'll find 30 hours of lectures by Gary Gensler, who's the current head of the SEC. I listened to all 30 hours, every minute of every 30 hours. 3 million people started the lectures. 30,000 people finished the lectures. Most people don't actually bother to figure out what he said. He said it all before he was put in charge of the SEC. The summary is Bitcoin's a digital asset. It needs to be regulated for the benefit of the world, but we don't want to over-regulate it such that we would eliminate, the 21st century fintech economy from forming. And that seems to be the consensus here. Like the government doesn't seem to show any interest in wanting to shut it down. All they want to do is make sure you pay taxes on it, and you abide by anti-money laundering laws and know your customer laws.
Before we go to our digital members, one more of our patrons, Patricia, please. After you unmute yourself. There we go.
Hi, how are you? Thank you, Peter, and thank you, Michael and Bill. I'm in construction, so my question is, with regards to the $3 trillion this current administration is about to release into the economy, some of it is going to be in infrastructure. Considering the length of time these projects take and the inflation that we're facing, or it's happening, what is the likelihood the government, the federal government, will use Bitcoin or allow us to receive funds, get paid in Bitcoin? How do you see that conversation? Is it ever happening soon?
I don't know that the U.S. government will get involved in that. I think that's a free decision amongst vendors and employees to decide how they'll act. I think Bitcoin is an asset, so getting paid in Bitcoin is like getting paid in shares of Apple stock. So I think that I would say if you got paid, you should convert your money into Apple stock if you like Apple, or convert your money to Bitcoin. But the tax regime in the U.S. it's a taxable accounting event every time you transfer Bitcoin. So generally, I think the unit of account, the medium exchange, will be the dollar, and then I think every individual individual make their own decision about how much Bitcoin they hold.
Yeah, it's where do you hold your excess cash, and what treasury, and how do you do it? And it's going back to the beginning of the conversation, what Michael said, if we're truly facing a 21% inflation rate, holding cash on your balance sheet is not a smart economic move.
Yeah.
Right. The concern is that if a project takes 4 years and you agree to an amount, in US dollars, the project takes this long, material price increase, that's the way I think about it.
Yeah,
Yes,
you get a dilemma.
Yeah.
If you sign a long-term contract to deliver at a fixed price, and if the cost of your materials is going up, well, like look at lumber, right, which jumped. That is the inefficiency of inflation. Inflation creates uncertainty into the future, which makes it very difficult for vendors and companies to manage their operations. And that is why Wall Street is advantaged over Main Street. In Wall Street, you've got 8 people that hold $10 billion in assets, and the assets go up in value. In Main Street, you have 80,000 people doing lots of work, and their costs are going up, and they're locked into contracts and relationships, and inflation wreaks havoc with Main Street, but it benefits Wall Street. And if you don't have lots of assets on your balance sheet, then the havoc, outweighs the benefit, and it is what it is. Unfair, but it is what it is.
Yeah, and there's a risk you're going to take in the short term if you convert to Bitcoin, right? So as I take Bitcoin for A360 memberships and so forth, that's a risk I'm going to take. But it's how do you help move the mindset? Because one of the things, Michael, you said, another thing that we're staking Bitcoin on is global mindset. It's people's acceptance of this.
Yeah.
It's a network. It's, by the way, Bitcoin is a brand, and what is a lot of times people say, well, Bitcoin, what's it backed by? Well, what's Coca-Cola backed by? If you can walk into 1 million restaurants around the world, order a Coca-Cola, drink it, and it won't kill you, and they'll smile and bring you one, that's a very powerful brand. And if you know that you can accept Bitcoin or pay Bitcoin or hold Bitcoin, and you know what it means, that's a powerful brand. People underestimate the power of that brand. It is really critical, and it creates this powerful network effect. And displacing Bitcoin is like displacing Coca-Cola. It's like, isn't there something better than Coca-Cola? Yeah, sure there is. What's the name? I try to go into a restaurant and order anything other than Coke Zero tastes better than Coca-Cola. I have failed 100 times to order a Coke Zero in a restaurant. They're always like, "You wanted a Diet Coke?" It's like, it's already 10 years late and you still haven't upgraded to Coke Zero, 10 years. And the answer is, yeah, that's the network effect. Like, and it plays into money too, right?
Agreed. All right, Nia, let's get to some of the Abundance Digital members, please.
Great. So 2 related questions from Lena and Rick. What other tools or supporting technologies for crypto should be on our radar for future investment, aka skating to where the puck is going? And Rick asked, what is the best online website resources for learning about and following crypto news? And what websites do you follow?
Michael.
I'm not going to give you any investment ideas for crypto, because I think there's 10,000 private companies and 1,000 public companies, and it's managing your own risk, and so I don't have any opinions there. With regard to websites, hope.com is our website. We posted a lot of stuff about Bitcoin on it, and we also have on hope.com a collection of all the Bitcoin podcasts, all the Bitcoin leaders, all the Bitcoin websites that we found. And so if you just remember Bitcoin is Hope and go there, it'll direct you to a bunch of other resources. And so that's the first place I'd start. Bill, you have any suggestions?
Yeah, I mean, we have a ton of content. So we publish videos, generic on how Bitcoin works, how the other cryptocurrencies work, how our app works. We actually link to third-party apps on occasion. So Abra.com has a ton of content. Actually, we have links to even Hope on our website as well. So that's another place you can go for sure.
Nia, what do you have next?
One moment, I was on a different screen. Let's see. I had one from Melanie. How will the advent of quantum computing affect Bitcoin and the security to one's private keys?
Great question.
Yeah, sometimes this pops up. Generally, it's just FUD spread by some other crypto project that thinks they've got a different algorithm and they just want to create anxiety. I think the generic answer is technology is advancing and software techniques are advancing, and the Bitcoin network is being upgraded all the time to address software threats and opportunities. And so in general, I'm not concerned about quantum computing as a threat. I think that the Bitcoin network is the most secure network in the world. And over time, if somebody comes up with some hacking idea, they'll probably hack a centralized app first. Like, for example, Twitter got hacked and the hackers took over the president of the United States account, and they could have started World War III. And they did it with something which is 1 billion times or 100 billion times less powerful than quantum computing. So yeah, there'll be security threats, but Bitcoin's by far the most secure thing we've got in the universe right now. And it's upgrading in the software and the hardware all the time. So I think—
And the algorithms that Bitcoin uses are upgradable. So, we're probably 25 to 30 years away from computing hardware that can crack, the digital signature algorithms Bitcoin uses. And at that point, we will have long since upgraded those algorithms anyway. Just like the network is undergoing an upgrade right now to this new technology, Taproot. There will be others in the coming decades as well.
We've got 15 minutes left in the 2.5 hours, and this has flown by. I want to. We'll take more questions from digital and from the members. If you have, just raise your hand. But Michael, what hasn't been said? I mean, you've delivered this in beautiful analogies and probably the clearest messaging. And I think the thing I want people to get is this isn't just about the first world. It isn't just about us. It's about how do we create a more stable world. right? When we're looking at uplifting every man, woman, and child on the planet, they're going to be trillionaires living forever on Mars. That's great. But how do we give every man, woman, and child access to an economic system, as well as a health and educational system? And Bitcoin as an underlying layer is fundamental in global security and our futures. I mean, I can't stress that enough. If you want stability, you want people not revolting and starving in the streets.
Yeah, I think the things I haven't said that are probably important. One, Bitcoin is a bank in cyberspace offering a global, affordable, safe, simple savings account for everybody, for billions of people that either can't run their own hedge fund or choose not to. It's just a bank in cyberspace. And it's the first engineered monetary network in the history of the human race. And the significance of a monetary system is the monetary system is backhauling the energy of the economy. When I give you goods or services or property, if we want the economy to work, you have to trade me back the monetary energy. And every civilization is based upon harnessing energy, and generally every civilization needed of an effective monetary system. If I want to crash the civilization, I crash the money, because the money is what allows humanity to cooperate. So for the first time in the history of the world, we have a protocol that lets 8 billion people on the planet with a mobile device or any device take personal custody of their own life force, which life force equals money, equals monetary energy, equals assets, equals life savings, right? They can take personal custody of their life energy in the form of a digital asset. And that protocol allows 100 million companies to spin up websites and applications that all trade with each other across regulatory jurisdictions, across space, and across time. And the magic of this is it's not just moving $1 billion 10,000 miles. It's moving $1 billion 10,000 days away. Bitcoin is elemental to the civilization in the same way that steel or electricity or fire or aluminum is elemental to the civilization. No steel and no buildings. Every building is maxed out at 6 stories in the masonry world, and then it goes to 100 with steel. No aluminum, no airplanes. And Pete knows this better than anybody. No fire, no humanity, no electricity, no nothing. And so we invented the equivalent of a crypto steel. And what it means is I can create an organization that could last 100 years, and I can power it with an asset that will last 100 years. And generally, humanity hasn't had a long duration power source. So when you think about it like that, like the Rockefeller Foundation had conventional assets and boards of directors to stay rich and stay effective for 100 years, or the Hughes Institute. But the average person, they can't endow something that would last 100 years or 500 years. And Bitcoin is the first thing we ever came up with that has the ability to convey monetary energy across time and space and across political jurisdiction with no energy loss. And in that way, call it a battery that doesn't leak, or call it a canister of compressed air without a leak in it. And next time somebody tells you that inflation is critical, I want you to imagine someone saying, I really need a hole in your balloon, a hole in the ship, or a hole in the battery, or a short circuit in your... Here's the beauty. Everybody in economics thinks you need inflation. And there's not a single engineering discipline or a single machine that was ever built in the history of engineering that worked with inflation. And so the application of conservation of energy to human action and human economics, that is the singularity that is the Bitcoin that is going on right now. And that's, I think, why Pete is interested in this and excited about it. And that's why I see it as the most important thing in my life.
It's funny.
Michael,
One of
beautiful.
the reasons people don't talk, the average mainstream American consumer doesn't spend a lot of time complaining about inflation, right? The reality is 90+% of dollar stored's net worth is gone, right, over the course of a lifetime. But the biggest challenge is that most people are dying at such a young age that it doesn't manifest itself in a way that matters for the average person. But you start to integrate longevity into this conversation, all of a sudden it has a whole new meaning, right? What happens when people are living to 125 or 130 or 140? It totally changes the dynamics of what inflation means, what money means, what sound money means, et cetera, et cetera.
Bitcoin is immortal sovereignty, right? The general idea, the reason it's got a quasi-religious overtone is you're achieving immortality in cyberspace by creating something that is self-replicating like DNA.
We're going to take a couple more questions here in the last 10 minutes. Nia and then Eli.
A question from Greg. I co-founded Impact Scope, an MTP of bringing cryptocurrency and blockchain to carbon negativity, working with crypto exchanges, building APIs which provide their customers with the opportunity to offset their transactions with high quality carbon offsets in real time. Do you support this type of initiative and or have other initiatives or suggestions to tackle this critical issues? For example, ways for encouraging that mining is done with renewable energy.
I think mining is already the cleanest industry in the world. I think Bitcoin mining uses more renewable energy and more wasted energy than any other industry on earth. And I think people are only now just starting to realize it. I support anything that anybody does that they are doing in pursuit of a better world.
Eli, and then Jason Beckerman, if you want to ask, you have a couple of questions in the chat here. I'll invite you to ask those. Eli?
Great. Thanks, Peter. For Michael and Bill, what approaches have you found to be effective on a personal level in shifting mindset, or at least encourage consideration regarding the spreading of the power of Bitcoin in the effort to help and drive adoption? So your friends and family members that just kind of want to get a handle of it.
I think it helps to get out of your own frame of reference. So if you go study what happened in Argentina or Venezuela or Zimbabwe, or you go to any country outside the US and Africa and you study their economic system, go Google Argentine currency devaluations. It will be a very long article, with about 20 of them, and then just read it and then imagine that in the US, and that gives you empathy. So it stretches your system. I mean, engineers know that, the gravitational constant is the same in the US and on the Earth, but on Mars it's different. And so because they know it's different in different places, they have a much more open set of mathematic protocols. Sometimes we just get very myopic and we just imagine only life in our little sphere of influence, and we start to cut corners and make assumptions that we shouldn't make.
We're also, our mindsets are very short, right? We're only remembering what's happened in the last even weeks, months, and we sort of glorify the past. We forget how challenging and difficult it was. It's partly just the wiring of the human brain that's local and linear in that regard. Nia, did you want to ask a question? But Jason Beckerman, do you want to ask first?
Yeah, thank you very much, Peter, for putting this on. And Michael and Bill, thanks for taking the time today. Huge fan, Michael. So I've been in Bitcoin since 2012. This is my third cycle and roller coaster that happens every time. We've talked a lot about the power of what could happen over the next, 50, 100 years. In your mind, from an engineering perspective, what do you think the biggest risk factor to the Bitcoin network is over that time period?
I mean, the only legitimate risk that's material, I could say, is just a black swan, an unknown, because if you're humble, you can't dismiss the fact there's something you don't know that might be a material threat. But I think that the most likely turbulence just comes from FUD. The Chinese mine too much Bitcoin, crash. The Chinese aren't going to mine Bitcoin, crash. The FBI can't trace it, crash. The FBI traced it, crash. The IRS will ban it, crash. Oh, the IRS says I can keep it, but I got to pay taxes on it, crash. Right? I mean, it's just continual, anxiety due to some news because it trades 24/7, 365 on leverage. And on Twitter, someone amps up something on Sunday morning and it does something. So I think that's the most likely, headache.
At what asset class level do you think the volatility starts to taper off to the point where it doesn't, swing the way that it has over the last 3 cycles?
10 trillion, maybe.
Yeah.
Bill, do you agree with that?
On the volatility question, probably I would have said probably 25, but it doesn't really matter. I mean, at that point, I mean, it's certainly going to asymptotically, approach some other number as we grow. But yeah, somewhere in that range. And
Bitcoin,
yeah.
Sorry, Bitcoiners would say Bitcoin is truth, and it's giving you true price discovery, and it's the price discovery 27,365 everywhere on Earth, and so sort of by definition, the prices are going to be a little bit more volatile or a lot more volatile because there's freedom, and there's transparency, and there's truth. The freedom being somebody wants to bet 2,000 to 1 leverage on Saturday morning for a minute, they have the freedom to do it, right? So that freedom plus that truth makes it a little bit more volatile, but I think that it's clear that it's less volatile today than it was 3 years ago. And I think that every single time it grows by a factor of 2, 3, 4, it'll get less volatile. And once it gets 10 to 20 trillion, it'll still move. Volatility is the price we pay for winning.
Right.
As I say,
It's
Tom
being on the
Brady,
front lines.
LeBron James, they're the most volatile players, right?
Yeah.
The winners are volatile.
Yeah. On the risk issue, though, Michael and I have talked about this. We may disagree a little bit on this, but I think one thing I would like to see a protocol upgrade on in the next 5 years, and that's how long we have to think when you have a non-centralized governance structure, is this issue of privacy and fungibility. And I think it's not a systemic risk, but I think it's a limiting factor that I would just like to see go away. And that governments would have no say in this idea of whitelisted addresses and blacklisted addresses and all this other bullshit. And the easiest way to deal with that is just address the fungibility issue, do a series of network upgrades over the next 10 years, and slowly, right? And the issue will go away. Bitcoin will work just fine without it, but in my opinion, it will work a little bit better with it. And it's not a systemic risk, but it gives governments fodder to meddle in something that they don't totally understand. And if you remove the opportunity for meddling, the network is going to be, even more usable at the end of the day.
I'm going to end our conversation on this question from Jason English, who asks, how can we as bullish supporters of Bitcoin help use our companies to promote the Bitcoin story? And Michael, you've done that. Others have. I'm going to be doing that. But can you address that, both of you?
Yeah, well, my answer is every company on earth can do one simple thing, which is put Bitcoin on their balance sheet, right? Adopt Bitcoin as a treasury asset, either 10%, 20%, 50%, 100, some amount as a treasury asset. That's easy. One person can do it in a matter of a day. A more complicated thing you can do is some companies can build Bitcoin into their product or their service, like Square, like PayPal, like Fidelity, like Grayscale. If you're an insurance company, a bank, a fund company, a tech company, a device company, you may be able to build the protocol into your service or product. If so, that could be good for you. Square sold $3.5 billion worth of Bitcoin last quarter, right? It could be good, but I think that comes down to what your P&L is. And so that's my quick answer to that.
And I'll just make one plug for Bill and Abra here. I've gone to my service, people who provide me services, and I say, open an Abra account and I'll pay you in Bitcoin, right? Just in terms of getting that kind of mindset going. Bill, you want to add something here?
Yeah, I mean, look, we're onboarding institutional customers every day now. Companies are coming to us, mid-sized companies are coming to us and saying, hey, we love your dollar high yield product, but we would also like to start to put a small amount of our long-term holdings into crypto, Bitcoin or a little bit of Ethereum. Can you explain to us what the risks are? How does it work? Should we dollar cost average as a company, or should we go all in? And so, we'll spend time with people to explain our perspective on doing that. But that's by far the best thing that companies can do today to support the ecosystem. I mean, accepting Bitcoin as payment is fine. I think the way Elon did it, I probably wouldn't have done it at that scale. But the more important thing that you can do when you're dealing with the digital gold narrative is to accept it as digital gold and use it as digital gold, which is long-term holdings.
Yeah. So, Michael, Bill, thank you guys. Thank you for your time, for your generosity. Michael, you've got one of the clearest, strongest messages around Bitcoin is abundance in the world. And it's a message I'm super excited for us to be sharing here today. Bill, thank you for your work. To give it up for Michael and Bill.
Thanks for having us, Peter.
Yeah, thank you so much. Great to see you guys.
Thanks everybody for indulging us for this last few hours.
It's awesome. Awesome.
Woohoo!
All right. Thank you all. It's been awesome.
Thank you, everybody.
Thanks for hosting.
Thank you.